So welcome to the FHA workshop today. My name is Sean La Rue. I'm a loan officer at Franklin Loan Center. As you can see behind me, we want to live the life you've always dreamed of. All right? We're going to help you and your clients get there with the FHA and rehab programs today. I've been with Franklin Loan Center for about 2 years now. I'm a Spanish-speaking loan officer. I know. Nick White, what's going on? All right, I am. I've spent time abroad in Puerto Rico, in Paraguay, in Spain. I've had a lot of experience speaking Spanish, and I can help your clients with your Spanish-speaking deals as well. Okay. We're here today to find out about FHA financing and the rehab programs, because obviously you guys see that there's a big demand for it. How many of you, think about this for a minute, how many of you remember what the real estate market was like in 1991? Okay. How many of you were selling real estate in 1991? Or in the business? Okay, a few hands. Excellent. Did you know that in 1991, 17% of all loans were FHA loans? Okay. Can you draw any comparisons to the market in 1991 and the market today? Foreclosures, short sales, economic? Okay. 17% of the loans. 2 years ago, 4% of the loans that were originated were FHA loans. Only 2 years ago. Okay. Today, it's up to 8% of all loans originated, this is year to date, are FHA loans. Okay. Now, if you think about the loans that we're currently locking, you're obviously here today because you know that this program is in demand. Your clients are thinking about, asking you about these programs, and it's like a whole new world. Okay, what's FHA? Why is it back? Where did it go? But this is the market that we're in because the banks and the investors are pulling back and being more conservative. And FHA is a great solution for your low down payment, low FICO score clients, and we'd like to help them get qualified. Last month, we're pulling some numbers together. And write these down. You guys should have some spaces to take some notes. Last month, 45% of all loans locked at Countrywide were FHA loans. 45%. That's almost half of the loans that were locked last month, which are funding this month, are FHA loans. 23% are conforming 30-year fixed loans. 11% are government jumbo loans, which basically means the loan amounts between $417,000 and $500,000. You all know that recently the government increased the local conforming loan amount from $417,000 to $500,000. These are called agency jumbo loans. Okay, anything over $417,000. So 11% of all loans locked here were 30-year fixed and agency jumbo loans. Okay, and 11% was the government jumbo loan, which means that those are FHA agency loans, and 3% were the agency jumbo loans. So 11% are FHA jumbos, $417,000 to $500,000, and 3% was an agency jumbo, which makes up 82% of the total loans locked last month were 30-year fixed loans up to $500,000. 82%. Is this a product that's in demand? I think so. 45% of those were FHA loans. So we see the demand for it. You guys are obviously here because you want more information. My goal today is to get you information about FHA, getting your clients approved quickly, getting them pre-approved before you put them in your car, spend your money on gas, show them the property, because the most important thing right now is making sure that if they're not buying in cash, that we can turn the key and make them homeowners quickly. Okay? I'm going to have Patrick Mahon, the president of Franklin Loan Center, come up and talk a little bit about rehab loans. This is our 203K program, which is going to turn these foreclosures, stingy properties, that need a lot of help into properties that are habitable and that your clients can live in and that they're going to be happy with, so we can finance those upgrades. I'm going to tell you today about how mortgage insurance and the FHA is helping with mortgage insurance, because the investors right now are not doing equity lines of credit, the 80-20s that we used to see. We're doing high loan to value one loan programs, which requires mortgage insurance. And we're going to talk a little bit today about structuring your programs, structuring your offers with a down payment assistance program, one that I'm very familiar with, which is the Nehemiah program. This relates to the HARP program, Ameridream. I'm sure you guys have heard a lot about these programs. And if you're already on my email distribution list, you got some information recently about how the government's trying to, shut this down. So we don't know how long we have, but while we have it, I'm going to give you the tools and the information to make sure that you guys can get these offers written quickly. Okay? Can everybody hear me okay? I'm not speaking with a mic, so I just want to make sure. Yeah? Good in the back? Yes. All right, fantastic. First off, I'd like to introduce Ginny Anderson. She's our in-house underwriter. She's the one that's actually pulling the trigger and approving the loans in-house, guys. We are basically an extension of HUD. We have our direct endorsement, which allows us to approve, fund, and underwrite the loan right in-house. And Ginny Anderson's going to just talk real quick about herself and about what she's doing.
Okay, Reader's Digest version. I came to the Valley being 8. Got a real estate license. Started to show property. Didn't know why they didn't qualify. Got into loans. Went back to the real world in 90, Orange County, because we don't in the real estate market here. Got my DE because of what he said. I saw FHA. It was going to be loans in the future. Got my DE. Then the business kind of took a tank in 95. Rates went up. I was going to get out of the business. Called my girlfriend. Send me a paper. I need to move back to the desert to find a job. In the paper, there was an ad. DE underwriter, countrywide home loans. I was across the street at that marvelous place working for that wonderful woman. For 9 years, I ran their office department. I was the DE over there. I'm not there anymore. I'm at Franklin. We do close loans. Nice to meet you.